Welcome to this week's market drama. We'll begin with the S&P 500 and NASDAQ were up roughly 1.5% each, which puts them up close to 20% year to date at all-time highs, right? So what drove the market action? Well, most of the action happened after Wednesday when the Federal Reserve cut interest rates as expected, but they cut interest rates by more than the market was pricing in, by cutting 50 basis points instead of 25 basis points. That takes the policy target range down to 4.75 to 5% from the 5.25 to 5.5% that we had prior to Wednesday. They also updated the dot plot, which is essentially what the Federal Reserve members think the path of interest rates will be. They're now looking, essentially, when you look at the dot plot is telling us that they're looking to ease another 50 basis points with one 25 basis point cut in November and probably another one of 25 basis points in December. So the market loved that, right? If anything, after the report came out, the market kind of digested it, didn't really see a big rally. But then Thursday and Friday, the markets really kind of took the data in stride and rallied to all-time highs. On top of this, we did have on Tuesday, the Commerce Department reported retail sales. They rose 0.1% month over month, which was more than expected. And it really solidifies, as of now, this view of the Fed is cutting interest rates, but we're not facing a recession, right? So that's often called the soft landing scenario. And in that scenario, historically, stock market does do fairly well, right? So if the Fed was cutting and we were heading into a recession, maybe stocks don't do as well. If the Fed is cutting and it's essentially kind of getting ahead of the economy potential getting into a recession, and we have a soft landing, that environment does tend to be a fairly good one for stocks. And markets obviously are very good at pricing this in, and hence why we're up now 20% year to date. When we look at next week, we have PCI inflation data for August. Core PCE is expected to be 2.7% from the 2.6% from the prior month. So we'll stay tuned to see what we get then. That is it for this week. Stay tuned for next week.